Hello, everybody, and welcome to another edition of our SoCal First Time Buyer Market Update. This is for not tax day, April 15th, 2022. It is Good Friday, however, and it actually is a Good Friday. And we've been noticing that the market's been reacting a little bit to the rising interest rates. And while rising interest rates are absolutely a total bummer for buyers, especially first-time buyers, since you've seen your affordability erode to some degree, there is a silver lining to this. And the silver lining is that we are seeing the market is sort of stratifying out. If you watch our whole market updates, this is a fact we've been watching for quite some time, is that our market is reacting in a very price-dependent way. So what that means is, for example, at the $1.5 million plus price range, which is not the price range for most first-time home buyers, we are seeing that market is still incredibly hot, especially for those desirable homes. But we are seeing things be a little bit easier as you go down in price range, especially when you drop beneath $1 million, $1.2 million. In that range, those buyers tend to be a lot more interest rate sensitive. And the good news is, if you are someone who is still in the market looking, you're reaping some of those benefits by seeing that market be a little bit easier. Now, we've talked about this in the past. One of the reasons why it's not as much easier as you might expect is because these higher interest rates are also reducing the number of move-up buyers, meaning people are putting their houses in the market to buy something bigger. But let's jump into it. And we'll talk about kind of what we're seeing in the market. So first thing here is our closed prices. And if you look at this graph, right, if you look here, starting kind of at the beginning of the year, our closed prices started to kind of go up and elevate. But if you look here, both in our single family homes, which is the blue line here, as well as our entry level condos, it looks like these price increases are starting to slow down or hold steady. And I definitely think we're seeing that. If sellers put their home on the market and they say, I'm going to take February's comp and I'm going to add $100,000, they're not going to get very many showings. They're not going to get very many offers. The market has not just kept moving upward like it did in the beginning of this year. And we've talked about this before, like this is actually not that normal. Our markets don't move in these perfectly smooth linear fashions. 6% increase in a year does not mean 0.5% a month. It means 3 or 4% in the spring, and then the rest of that kind of put through the end of the year. Sometimes there's even months where we're down a little bit. So if you look at these, you can start to see that this kind of slope that we saw in the beginning of the year is tapering off a little bit, which I think really is some pretty good news. If you look at our monthly payment, though, that has not tapered off, right? That has kept going, and it's largely been a result of these interest rates, which keep climbing. We need to actually extend the range on our graph here to show that. And that's kind of the downside of things, right? Is that your affordability has eroded to some degree. There are two silver linings to that. The first silver lining is something we talked about, and that is that the market in these entry-level homes is a little bit less competitive than it was. But there's a second silver lining. The second silver lining is there is an opportunity, should rates dip again, that even if you buy at a certain level today, that you could have a lower payment at that point in time. So not something to plan on, but kind of one of those happy surprises that could in fact happen. Excuse me. So we look at our minimum household income required. We are firmly above that 120,000 number, probably about 125, and we are at 102 or 103 for our entry-level condos. Remember, this is household income. So obviously that means in a dual income household, you would count both incomes for these numbers to hit these entry-level homes. And this is, again, based on 5% down, all the other fees included in there. And it is the minimum income needed to qualify at present prevailing rates if you have no other debts. Now, if we look at our absorption rate, right, this is a number that is showing some signs of weakness. If you look at our blue line here, that's our entry-level single-family home, there's a couple things that you want to pay attention to. So we are at 81%, which is still a very competitive market. But if you look at where we have been in the high 80s, low 90s, I mean, really, this is a low number overall. And I think it's important to take a look at that. You are going to see that your competition level, especially if you are not after those top listings, those ones that are the most desirable, you're going to find that the market for the lesser desirable listings is quite a bit less competitive in most areas. Our condo market is still pretty hot at 89% on our absorption rate, but even that, I expect to see that to fall a little bit. I think we are seeing an easing in these markets. Now, if you look at our total inventory, that's really held pretty steady. I do think we're still at a place where, we're not seeing, for that reason I discussed, we're not seeing this plethora of listings hitting the market like you might expect. And the reason being is that where are those sellers going to go? Well, they don't like the prospect of trading their 2.75% loan for a 4.5% loan on whatever they're buying. So those sellers, they're just staying put. They're not putting those homes in the market. And what that's doing is that's controlling our inventory. And that's the reason why we're not really seeing backward movement on prices despite interest rates going up. I mean, that is the reason, is that we are still in a shortage of homes, meaning there are way more people who want to buy than there are available homes to purchase. Now, if we look at our 14-day still active, remember, higher numbers do mean a less competitive market. These numbers have gone up a little bit over the last few weeks. They're still not at that heightened level of late summer, early fall like we saw last year. But I've got some hopes. I mean, we are at a level that is higher than we were at this point last year. So kind of bearing that in mind, I think we're actually in a pretty good spot. Finally, we have our week supply of homes, right? And so we're going to do a little bit of fun, what I call intuitive math. And so if you go back here to our total inventory, the inventory is relatively flat, right, in terms of the numbers. It's just the number of homes, 2-bedroom, 2-bath homes available. This is the number of 3-bedroom, 3-bath homes available. That's it. It's just the raw numbers. If you look at that, these numbers are pretty flat. But look at this. Our weeks of inventory has risen slightly. And what does that mean if our inventory in terms of weeks has gone up a little bit? What that means is that the number of homes being purchased is actually dropping. That speed of homes being purchased is dropping a little bit. And what that's doing is that means we have more weeks worth of inventory available. So really, it is some good news out there. I think if you have been waiting on the sidelines, I'm not going to tell you that you were right. You really should have bought last year. However, you haven't missed your opportunity. This is the kind of market where the advice that I give to buyers, especially entry-level buyers, is if you think that you're going to be in a home for 3 years, which is kind of a common number for a lot of entry-level buyers, what they think, be flexible and allow longer-term plans. I don't know what the future brings more than the next couple of months, and I think anybody who tells you they can predict that is lying to you. So in a market like this where there's some uncertainty built into it, I think the smartest thing you can do is make a plan that will work for you and potentially your family in the long run, but also make a plan that has flexibility built into it. Obviously, we are available to help you purchase your first home, or if there's someone that should be purchasing their first home, check out, there's a link below in the description if you're watching this on YouTube, where you can schedule a no cost, no obligation 15-minute consultation. And then finally, do not forget to like, subscribe, hit that notification bell. Have a great Friday and a wonderful weekend, everyone. We will see you again real soon.